Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Saturday, December 1st. And this is the weekend update. And first things first, I want to say, members, the monthly newsletter is coming out either later on today or tomorrow, so keep an eye on that. I'll be emailing that out to you, and you can kind of get a view of what I'm looking for going into the end of the year, and levels to trade off of, what I'm watching, etc. So you should enjoy that. And anyways, let's get back into the weekend update. S&P continued its ride higher overall throughout the week. Let's see, we have Monday started around 1400, traded as low as 1382, and then finished up towards 1415 or so. And this market just continues to rise. Congress members, the president, they're all moving the market right now just based off of the market's purely waiting on what's going on with the fiscal cliff. So with that said, we need to pay attention to when Congress will be speaking, because it could be moving markets, and you don't want to be in a position that you don't necessarily need to be in, not knowing when the Congress is about to speak, or a Congress member, the president, whatever the case may be. So first things first, you want to keep an eye on your important levels for volume profile. 1403 is the point of control for the year. Go ahead and mark that down on your chart, because that's an important level. Another important level is basically the highs that we reach, 1419, 1420-ish. That is the value area high for the year. That's another level that you want to take note of. And then the 200-day moving average right around 1383, 1384-ish, give or take. And then from there, we will look into some levels on a smaller chart, or a smaller time frame chart, to get some more accurate levels. So what we can do is we can go ahead and do that now. And since the month of November is now done, now that we can use these levels for December to trade off of. So the value area high is 1418, basically the highs that were the ceiling for this most recent week. We need to mark off this gap up here, which is 1425 or so, 1426, that general range. You want to pay attention to that level. The 90-day point of control is right with the 50-day moving average, so you want to take note of that, 1406. The 50-day is just below that, and it was also what was resistance, now support, that thesis. So keep an eye on those levels. And then from there, if you want to look at the 20-day, it's right around, it's going to be creeping up the next few days. So I would basically say around 1400. But I'd be looking at this high volume area down here. If we do test it, 1388 on the downside to 1374 below that. So 1388, let's call it, down to 1374. That's your high volume area. The value area high low for the month is 1375, call it, and the point of control for the month is 1385 or so. So go ahead and mark those levels down, because they're going to be very accurate going into the next this last month of the year, and you want to pay attention to it. Also, if you want to note the high for last month, 1431 or so, and then we go into the prior month, which we're yet to test the value area high for that month, which is 1444. From there, I'm looking at the very top of this high volume area, which is 1458, and these are all important levels that you want to take note of. Also, I guess if you want to, we can look at, let's get to it, Fibonacci retracements, just to see. The 50% is right around the point of control too, so you can go ahead and mark that down. And really that's it. The 20-day is right around the 61.8% retracement, and so on and so forth. So I would just kind of leave it at that. And if we do breach 1374 on the downside in December, then you'd be looking for a gap close. That's around 1360 on the S&P. And then from there, you'd be looking somewhere around the lows, around 1345 down to 1340. That would be your range to the downside. So those are really your important levels on the S&P. That's your broad market. So you want to be paying attention to those and taking advantage of those levels. Similarly with the NASDAQ, I'm not going to go into as much detail here, but you have your point of control up. Let's see if I can get the right tool. 2634 is your point of control. Your 50 days right at these current highs for the week. So keep that in mind. The 200-day also right at these levels. There's a cluster of levels right here, so you want to pay attention to those. Also, the point of control for the month, and this is important. Write this down. The point of control for the month of in the NASDAQ finished right basically where price action closed. What that indicates to me is there's a high chance that the NASDAQ technology will outperform one way or the other. It will either outperform to the downside if we see some type of market slide, or we will outperform to the upside if we see some type of rally. So keep that in mind. One thing that you want to take note of is the point of control for the prior month back in October. Price finished above those levels. So what I see, and this is very important to be aware of, is this entire zone here is rejection. This is all, this was considered too much value, so if we hold above, say, the 50-day moving average, this blue moving average here, there's a high chance that we're going to go and test 2750 to 2770 on the NASDAQ. That's about 4 to 5% higher, give or take. So that's something that you want to take note of, and you want to be a part of if you can. So let's keep your eye on that. All right, let's go into the currencies because they do matter. The dollar. Now this is going to be an important chart because it's going to reflect, okay, is this market going higher or lower? And you are sitting at the point of control for the year on the dollar. Similarly, with the NASDAQ and the S&P, they're all right around their point of controls for the year, within a couple of percent. What that means to me is this fiscal cliff here is the catalyst. Once we get resolution on this fiscal cliff, you're going to see a market move. So if there is positive resolution, I would suspect to see, and the market likes, how the fiscal cliff is being resolved, I would expect to see a big market rally. And that's just based off of, looking at the S&P. Originally the point of control was up at this 1401 level, or where it is now. Then we moved below, the point of control shifted to 1360 or so. We spent 2 days under there, and then we reversed, and look at the reversal we've had off of those levels. Now the point of control has shifted back up, basically call it 1400. That's where you want support on the S&P if you do see any downside to the market. So basically what that's saying for the dollar is, hey, dollar, you can rally some, but basically 20-day moving average, it's going to be a close one. 20-day moving average, around 80.50 on the dollar. That's not too much upside, but that would be where you'd be looking to scale out of more dollars and into S&P. However, we are at the point of control for 90 days. We are at the point of control for 2 months ago, and we are at the point of control for the year after a breakout to the upside. Now, with that said, I do think it's dollar negative. I continue to believe over time, and I could be wrong about this short term, but over time the dollar is going to revisit the mid-70s, and I think that's something that you want to be aware of. So overall, you're at an inflection point in the dollar, and that's really important, and you don't want to take that off your screen. And if you can't watch the dollar futures, then at least put the UUP up on your charts, and it's close enough. All right, the euro continues to do fairly well. After we popped above what was support, which was support here at 128.30 or so, 128, whatever you want to call it. We dipped below for a couple weeks, and then we immediately pushed back above. So far, we're holding that, but I'm looking at this point of control for the year, 130.92 or 130.90, 131, whatever you want to call it. That's going to be your very important level that you want to mark down on the euro. You also want to pay attention to this big high volume area right here. Call it 129.50 on the euro, because that could turn to the point of control if we do balance here for another week or two. And you want to pay attention to that because that will, again, result in some type of move. Maybe you get, and this is, I really don't like head and shoulder patterns because I just think it's, this sort of formation. But you could see maybe some type of head and shoulders, forming. It's really speculative right now, but you'd be looking for, 126.50 to 131. You could see a nice move to the upside on the euro. Basically, year-to-date highs 135 or so. That's something that you want to pay attention to. However, let's keep your eye on the point of control for the year because that is the ultimate level that matters. No other level matters as much as that on the euro right now. If we zoom in on monthly profiles, what we're seeing here is what was resistance, which was the point of control for last month. We popped above that for 2 bars and then we sold off from those levels. We had pretty decent selling volume. That's when I got short SPY. It was good for 1 day and then it reversed. The euro popped back above that resistance level, 129.70 or so, held it to the downside, held it when it tested those levels, held the 90-day point of control, and now we're pushing above. Again, you just want to be watching these levels, and I know it's a lot, but really the most important one to me right now is the dollar because it's literally right at its point of control for the year, and also the NASDAQ, so you're looking for some type of cue there. The S&P, the S&P also, so I really can't say there's one or the other. Let's go into a few ETFs just so we can cover them really quick, just to kind of show you the market's waiting for fiscal cliff resolution. Look at how the volume's just completely gone down the last 2 weeks or so. 50-day moving average, value area high, it's resistance right now. We're going to get a point of control shift for the year up at these levels. That means one of two things. Values migrated higher, and we're going to see some type of breakout to the upside, or you have a bunch of stuck buyers up here, and we're going to see reversal back down to the downside. It's going to be pretty obvious, and I just want to point that out. The month ended price above the point of control, above the 20-day, above the 50-day, but you have to see some type of push above 1584, a close above those levels on an hourly scale. Then you can look up another percent or so, but from there, we have to get above that level to get really excited about this, despite the fact that we're above the point of control for the month, the 50-day, and the 20-day. So I would just keep an eye on that. Industrials, the reason why I bring this up is because we're at the point of control for the month, or that's where we finished for November. That is going to result in some type of move. You're either going to retest these highs here around 37.50, or you're going to retest basically the 50-day, the 20-day around 36.50, and then potentially down towards 36. So you have some levels to trade off of on industrial, so keep that in mind. If I bring up the 1-year chart, what you're seeing, similar picture, and the point of control for the year is right at these levels. It just continues to show me that the market is brewing for a big move, and this is important. It's brewing for a big move because all of the 1-year point of controls, all the monthly point of controls are in alignment, and it's going to show you one way or the other. I can't tell you which way it's going to go. That's why you just watch these levels, and hey, stay fluid and make sure that you have a plan for which way the market goes, and when it goes there and it goes with volume, join it because it's going to be worth it, I promise you. So just keep that in mind. XME, metals and mining, same thing. You can see the point of control here. We're definitely trending down still relative to the 200-day moving average, but this point of control for the year, keep an eye on it because it matters. That's, the monthly point of control, again, right at these levels. Let's see, XLB, materials. This one's pressing a little higher. It must be the 1-year chart that I'm looking at. Yeah, it is. The point of control for the year, we're right at those levels. So we'll, again, wait and see. Just keep them all on your radar. XRT, now this is the one that looks strong. We bounced off the point of control for the year, and we've seen a nice rally back to the top end of the range. Now what you want to see is, okay, can we make some type of push to new highs? And based off of the monthly charts, as long as we hold this month's point of control, you can even give it a little room and say give it till the 50-day moving average. These swing lows here made back a couple of, I guess, days ago, last week. Keep that in mind. Use them to your advantage. If we break above the value area high, then you're looking for the year-to-date highs, or at least the swing high. I'm not sure if it's year-to-date, but I think it is. And then we'll go from there. So keep that in mind. Really, that is it. Members, we're going to go into a little more detail in the monthly newsletter, so I think you'll like that. Also, we'll talk a little more about the trading results for the month of November. So anyways, take care, have a great weekend, and I'll talk to you next time.